Yes, good morning, everybody. This is the first physical conference that at least I'm attending. So I have to especially thank Farhad for having the courage to move back to physical conference format, although it's a hybrid format, but well done. It's also, if I count well, the 13th Farhad Finance Forum. So this has become a tradition, and it is one of the prime events in Luxembourg, and I'm honored to be asked again by Fabio, by Marco, thank you very much, to say some words. I had prepared a lot of things earlier this year when the conference was due to be on sustainable finance and the Green Deal and so on and so on. But I think everything has been overshadowed by a tsunami that we viewed, and that was this COVID issue. And the COVID issue has paralyzed the world for the last 6 months. And the COVID, unfortunately, will still dominate the world for at least another 6 months, hopefully not much more than that. And this is quite unique because we had crises before. We had steel crisis, we had financial crisis, we had many crises. This is an unprecedented health crisis. The health crisis led to a crisis of the economy in the real world, and may lead to a financial crisis, may lead. Hopefully not, but it's not excluded. In the immediate aftermath of the COVID crisis, the reactions were very good, and people were quite resilient, at least in our world, because there are sectors, as you know, where it's quite dramatic, and they will probably not recover. But as far as the finance world is concerned, the immediate response was good on all sides. I think your companies, you triggered your BCPs. You had never tested this to a scale 100%. We had never tested this ourselves at the CSSF. But the massive working from home worked. Governments played their role with direct aid, with special laws also to defer stuff. Banks played their roles. Actually, banks had been the culprits of the last crisis. Banks are helping now to solve this crisis with loans, with moratoriums. To give you an idea, today in Luxembourg we still have 2 billion worth of loans that are under moratorium. They were granted for 6 months, and they will come to an end soon. The ECB played its role with monetary policy measures. They supported liquidity. They had this PEP program, Pandemic Emergency Purchase Program, to inject liquidity in the market. And they are supporting the recovery. EBA and ESMA played their role with guidance, with flexibility, 2 important authorities. I should mention EIOPA as well for insurance. It's a little bit further away from my world. And the CSSF, we played our role with a few things. We remained open, of course. We kept all the meetings as they were originally scheduled. We issued guidance, and we were flexible. We have also a whole section of Q&A that we have developed especially for COVID. That being said, you have to take a closer look at the markets, and the picture there obviously is a little bit chaotic. In Q1, we had a fast decline of financial markets. It was one of the fastest declines that we have ever seen, and a very severe decline. Corporate bonds spreads surged, volatility surged, and there was a liquidity contraction. Especially, remember, 31st of March, quarter end, there was an issue with liquidity. We overcame it, but it was quite harsh. We then saw a rebound in Q2, and that's also interesting because we witness now a bit of a decoupling between financial markets performance and the real economy. And is this going to last? We don't know, because this will depend on whether there's a second serious wave of COVID and whether the real economy can kick off again or will still be in a slow mode for a period of time. And then what we don't master is other external events. And we have forgotten about those events, but they are still there. We have serious trade tensions between China and the United States, and we have Brexit. And Brexit still is a serious issue. I will come to that in a minute. Market infrastructure worked generally well. We had a huge activity during that period, very busy, but the infrastructure was resilient. In the asset management space, there was quite a big activity in the fund sector. We saw quite impressive redemptions immediately after the lockdown. Liquidity deteriorated in some segments, high yield bonds, emerging market bonds, fixed income. And we had to use, the market had to use liquidity management tools, mainly swing pricing, gating. We had a few suspensions. As I speak now, we have about a dozen of compartments in about 8 umbrella funds suspended. On the consumer side, it was quite tough actually, because consumers suffered from the drop in valuation, but consumers also suffer from the restriction on paying dividends. So as you know, the ECB has said that no dividends should be paid in the financial sector for the time being, and that has also led to consumers suffering. Primary issues, there was a standstill on the equity and the bond market. In the bond market, this has resumed again issues, but SMEs are still facing financing gaps. And then, another aspect not to be underestimated is, and that's typical for all difficult periods, there's a temptation for fraudsters to become active with proposals to consumers, and we remain vigilant on that. Cyber attacks and operational incidents remained quite low, but we should remain vigilant in that as well. Luxembourg banks, like other banks, had triggered their BCPs. That worked. It was impressive. Luxembourg banks are very highly capitalized, and this helps, of course, now in the COVID crisis, and it will help in the weeks and months to come when we will have non-performing loans and where there will be an impact on the bank's own funds. Liquidity coverage ratios are also high, and they were respected. The market risk remains limited for the moment, but I would caution this. The credit risk, we don't know at the moment what the impact will be because we still have the moratoria, we still have other measures in place. Once they will expire, we will have a wave of bankruptcies. This will have an impact on loans and loan provisions, and we see already now loan provisions going seriously up. But the exact impact of all this will be seen in 3 months, 2 months, 3 months, 4 months from now. The CSSF, we started actually to send people home at the beginning of March, the 2nd of March, 2 weeks before the lockdown. So when the lockdown came, we were 56% people working from home. And by the end of the first week, we were 99% of people working from home, but we kept the activity alive. All meetings were kept. They were moved to video meetings. new authorizations continued. So it was, in a way, business as usual, although new applications obviously slowed down post-lockdown. We cut down part of our activity, on-site inspections, obviously, thematic reviews, SRAP evaluations, prudential reporting was deferred. We gave some flexibility on IFRS 9. So there was a number of measures that we took to help the markets. And as I said, EU authorities also did their work. They helped. They also deferred reporting obligations, and they put in place other flexibility. So you could also see during that period of time the limits of Europe. Obviously, you have seen the limits on the health response, but there is no common health market or health policy in Europe yet. So there were national responses. Every country had its own agenda. That was not good. But even on the financial market side, when it came to deciding on short selling bans, there couldn't be a consensus at EU level, at ESMA level, so 6 countries moved ahead on a national level, but that was not a satisfactory situation for an integrated market. So this is a bit where we are going to be with COVID. We don't know. There is unlikely going to be a V-shaped recovery that was talked to a lot. And it's much more likely that we will see a recovery that resembles the Nike symbol on your shoes. So a slower recovery that is taking much more time, and we may or may not reach the levels pre-COVID crisis in the immediate future. I mentioned Brexit. Just a few words about Brexit, which is still also a topic high on our agenda. It is very unlikely that there will be a trade deal. I think that's fair to say at this point in time. So the market, yourselves, you have to be prepared for a no-deal situation. Now, the good news is that the preparation for this scenario has been going on for quite a while. The Brexit referendum took place on the 23rd of June 2016, so this is now quite a while, and people had the time to prepare. Nevertheless, there will be issues. You know, we are still largely dependent on the UK market infrastructure. The clearing is still largely being done in the UK. We also outsource and delegate quite a lot to the UK. And so questions like equivalence of regimes will be high on the agenda. In the absence of an EU-wide decision on equivalence, we will have to move to national equivalences on a bilateral basis. We have refrained from doing this with the UK so far, but come October, November, we will have to look into this because the markets will have to continue to operate in an orderly way. And there are these big dependencies, so we need to ask ourselves the question on equivalence. And the good news is, in our national legislation, we have this possibility in certain areas to rule on national equivalences with third countries, including then the UK, and we stand ready to do so. This is important in the asset management area, in the fund area, for instance, when it comes to questions like delegation and outsourcing, where having an equivalent system is one of the conditions. So this conference is, again, under the sign of green finance, sustainable finance. Last year it was called, as Fabio reminded us, the green tsunami. The tsunami came. This year it's called opportunity. Hopefully Farhad will be right again. I think that if you look at the Green Deal, the EU Green Deal, which is the most ambitious plan in this area in the world, the Commission is hanging on to it, is hanging on to the deadlines, to the agenda, and is even thinking about improving the already very ambitious Green Deal. And we have seen this also on the banking side. We are seeing this on the asset management side. And the first specific big step will be March next year, when we will have disclosure obligations that will have a huge impact on our fund industry. There will also be organizational requirements, operational challenges. My advice would be, I have been following what EFAMA did and what some trade associations in Europe were doing by saying, this is coming too soon, we are not technically ready. I would recommend not to spend much time on this complaining. You should embrace this as an opportunity, and you should work to it to be ready as much as it's feasible for the March deadline. The technical standards are not there yet, all of them. They will come in December, but you should do all what you can to be ready, because this is also about the image of Luxembourg as a sustainable finance center, and this is an opportunity for us to position ourselves as amongst the first movers, as we did 30 years ago with the UCITS directive implementation. UCITS, MANCOs and AIFMs will be impacted. I think the overriding question here is a question on also how we will rebuild the economy post-COVID. And here I think there are two options. We can rebuild a brown economy and then dismantle it, because we will have to do it, and then rebuild a greener economy. That is stupid, but it could be a natural tendency now to not bother about sustainability, rebuild something in the old system, but that will have a double cost and would not be clever. As I said, we should be early adopters of these measures, bearing in mind also that Europe is not the biggest CO2 producer in the world, but we have to play our part there, as we are reminded on a regular basis by people like Greenpeace. We have Mrs. Holbach speaking later today as well. There is no planet B, and we should always keep this in mind. Another factor that is high on our agenda is the digital agenda. There is already a profitability issue in financial services and financial service providers due to the high cost of regulation, due to antiquated infrastructure, sometimes antiquated systems, high salaries, and so the jaw is a negative jaw, and there is a profitability issue. Only the fittest will survive, and this is being accelerated now by the COVID crisis. But I would say the digital agenda is a must. We will not have a situation, as some people foresaw 5 years ago, that there will be no banks anymore and people will only use their apps and neobanks to do their financial affairs. That is not happening. However, those who do not embrace the digital agenda will die. It's very clear. It's a question of survival. So I would say it's not only the fittest that will survive, but it's the fittest and digitally enabled and sustainable companies that will survive. And so here is a huge opportunity for you if you embrace this. The biggest deficit that I see is not on talking about digital or talking about sustainable finance. Every week we have conferences on both. Right this week we had ICT Spring with 5,000 people connecting. We have every week conferences on sustainable finance, but it's to live it. And to live it, you need to educate people. This is within the organizations, and it's also in schools. It's a huge educational effort because people don't really have a clue what means sustainable finance within the organizations and also outside. And this starts at a very high level. It starts at board level. It's the C-suite level. And there's a huge educational effort needed there, but there's also a huge opportunity. So I will close my introduction remarks here on this optimistic note, I think Luxembourg has all the ingredients to be a leader in embracing digital and also a leader to embrace the green agenda. But there is urgency and we need to live it now. Thank you very much.
Yes. Dear Excellencies, dear organizers, ladies and gentlemen, dear Claude, thank you very much first for being here. This is my first physical appearance in a seminar since February, so I have to get used to hold a microphone again. This is something we lost somehow in the last couple of months. I'm here today on behalf of Luxembourg for Finance, the agency in charge of the development of the financial center, to talk a little bit about the future of the Luxembourg Financial Center. We have been publishing our Ambitions Plan 2025 in January, just before COVID-19 broke out. And over the course of the last months, we have been revising these ambitions in light of the heavy consequences and heavy burdens this virus has laid upon us. What has not changed is our definition of the future development of our financial center, because it remains true that it is rooted in the success it has achieved over decades. And this is thanks to our openness to international trade. This is thanks to our responsiveness to financial and technology innovation, and most and important of all, thanks to our capacity and agility in adapting to new circumstances. For the financial industry, the Sustainable Development Goals and COP21 have indeed been a game changer. It has, one can say it was a turning point by unlocking the potential of sustainable finance and underlining the need of huge investments. So the consequences for our and all the financial centers will be far-reaching and will most certainly continue to be so. I don't like so much talking about tsunamis. I have known so many of them in the last decade since the financial crisis. We rather would like to look at the opportunities sustainable finance especially brings to us. So our aim, 2025, our ambition is to finance a sustainable future and putting qualitative growth, innovation and stability at its core. So how we intend to do that? So we will try to work around 6 ambitions. The first one is being to leverage our position at the heart of Europe. The second is to foster our complementarity with other financial centers. The third is to lead on sustainability. The fourth is to push innovation, then to pursue responsible governance, and last but certainly not least, to nurture the human dimension. So what do I mean by that? The fundamental purpose of a financial center is to foster economic growth, foster sustainable economic growth, and to create jobs. This has clearly been underlined by the current crisis. The financial centers are willing to play this role and to help our economies worldwide to recover from the consequences of the lockdowns. What we need, what the financial centers, especially in Europe, need to achieve that, to achieve these many ambitious goals we have set, is a well-functioning single market. People often tend to forget how crucial the single market was for the development not only of the Luxembourg economy, but of the whole European economy, and have clearly forgot the importance for the social European dimensions. So this is why we as Luxembourg Financial Center look very much forward to continue to achieve the goals of the Capital Markets Union. The Capital Markets Union has been designed to rebuild the EU economy and to mobilize the much-needed long-term investments in new technologies and infrastructure to tackle the climate change and help to deliver, Claude Marx mentioned it, the EU's Green Deal. And, of course, our digital agenda, because the digital agenda is very much related to sustainable finance too. So our financial center is committed to help to achieve this goal by contributing to job creation, to sustainable growth at home and across the EU. And we intend to play a key role of developing a sound and competitive EU regulatory framework promoting financial stability, resilience, and innovation with new products and services which meet the objectives of the Capital Markets Union. I mentioned it before, no financial center can achieve these goals alone. We need to work together. We need a complementarity between the different, not only EU financial center, but global financial center. These ambitious goals require that we tap capital sources from around the world. And capital is by definition international. Luxembourg's multi-jurisdictional expertise has for decades helped connect investors with firms and projects in need of financing. Now more than ever, finance needs to be fluid and deployed for the benefit of all. So Luxembourg will help with that by strengthening its own ecosystem, by increasing its international reach, and by further strengthening its role as regulatory, risk management, and compliance center. Our third point of our ambitions is to lead on sustainability. In 2015, we have been issuing what we called then our LuxFin 2020 ambition. Since then, really a lot has happened. Brexit referendum hasn't seen the world yet. The landmark COP21 was just about to start, and the SDGs just about to be published. Now the COP21 agreement in Paris, agreed on up in December 2015, requires capital raising on an unprecedented scale. It is estimated that between $5 to $7 trillion will be needed. To that end, new products and services will have to be developed. And Luxembourg is one of the financial centers leading this drive to increase the total level of funds in sustainable investments. We take enormous pride in being a major player in this drive and a recognized top global financial center in green finance. We are very much supported by the Luxembourg government by this. The Luxembourg government actually in 2018 has put in its coalition agreement sustainable finance as a priority. 2 years ago, we have been publishing a Luxembourg Financial Sustainable Roadmap. In this roadmap, it was required that we build up a body that would coordinate and develop and work out a strategy for our financial center in terms of sustainable finance. Well, this Luxembourg Sustainable Finance Initiative has seen light this year. It was incorporated in March this year and is currently working on this strategy and will be publishing it by the end of the year. Luxembourg is also proud founding member and lead donor of the UN's network of financial centers for sustainability and actively supports it. As I already mentioned, it is necessary that we all work together on a global level. The sustainable investment agenda is a global one, and Luxembourg is really proud to be part of it. So Luxembourg will continue this vital endeavor by growing the share of sustainable investments within the overall financial services market, by building on the EU taxonomy to develop new frameworks for sustainable financial products. We will further developing Luxembourg as a hub for impact investment and blended finance. We will setting up dedicated sustainable finance educational programs. It is really underestimated in our eyes how crucial education is to achieve these different goals. And, of course, like we ever have done, is we will help other financial centers to develop sustainabilities and their efforts in doing so. Claude Marx mentioned earlier the importance of the digital agenda. The digital agenda is important not only to drive down the costs, the operational costs, but it's very much linked and important for us to make sustainable finance a reality. These two, sustainable finance and digital innovation, are very much linked. Luxembourg's tradition of innovation often emerges as a direct result of the cooperation that characterizes its ecosystem. We can see on different scales how industry are cooperating in different kind of projects which are of common interest. I think about digital onboarding, about KYC. We can see how in DLT and blockchain industry projects like Funds DLT seeing the light. And this is something we need to continue. Cooperation is crucial. So the Luxembourg Financial Center will continue to push for the development of a European legal framework in innovative new finance sector. It will try to multiply the channels through which our industry can source innovative solutions and support collective projects. We will provide fintechs with a wide range of funding options and create a conducive environment for data-driven financial services. The fifth element of our Ambitions 2025 is responsible governance. As a leading European financial center, Luxembourg is very well aware of its responsibility to ensure not only sound regulation, but also fair taxation. The financial crisis of 2008 and the ensuing sovereign debt crisis have shown that both are required to be regarded as credible financial center. The COVID-19 crisis has now further underlined how resilience and sustainability are fundamental to good governance. The soundness which characterizes Luxembourg's financial industry draws on the country's well-established reputation for political, economic, and social stability. This long-term stability has been a strong attraction of the financial center for international investors. Luxembourg's attraction as a financial center and as a leading investment hub rest also on two additional pillars: our sophisticated corporate law and our efficient application of the highest standards in financial supervision and investor protection. So, to make sure Luxembourg keeps the strong reputation, we must make sure that we keep compliance with the highest international standards, that we maintain a healthy and stable legal and political environment, rewarded by a very important AAA rating, be amongst the first to implement European law and so to build on our first mover success in sustainable finance. And last but not least, we have to provide international investors with the highest possible standard of protection. This brings me to my last point, nurturing the human dimension. The Luxembourg Financial Center has built its success on its workforce. And we cannot exist without the professionals that work in a financial center like Luxembourg. Also, the COVID-19 crisis has underlined the importance of the well-being of our workforces. Luxembourg will therefore continue to improve its working environment by upgrading its infrastructure and improving quality of life so that the financial industry can continue to drive. Furthermore, to flourish in the future, we will be enhancing the coordination of government, academia, and industry in order to develop our talents. And, of course, as Luxembourg for Finance, we will continue to further raise Luxembourg's profile among highly skilled workers and top students. As Claude Marx mentioned quite rightly, we have all the ingredients to meet the different ambitious challenges successfully. Luxembourg for Finance and the whole Financial Center will be committed to help shaping this better world we all need. Thank you very much.